right, good evening, folks. This is Faris with TwT. Today I wanted to share a pretty exciting announcement here in the first video of a series that we're starting up. In the past couple of years, we've had a free weekly newsletter, whether you were a subscriber or not. Just to fill you in, it was a market recap of what happened in the past 5 days and what to expect for the upcoming week. Being a visual learner, I felt like I wasn't really getting my points across, and I felt like if I was a subscriber of this newsletter, I would benefit a lot more from an actual video. So we are actually going to replace the free weekly newsletter for Trade with Tex. And again, this is public, right? You can share this with whoever. It's going on YouTube, not just to members on the website, okay? We're going to replace that free weekly newsletter with a weekend preparation. And I'm going to do my best to try to put one out every weekend on Sunday, kind of late afternoon, early evening, okay? But either way, this is going to be the first of the series. To be clear, in a lot of the YouTube videos that I put out, I go over technicals and how to trade based off of charts, based off of different time frames, etc., and I teach you. But this is not going to be a teaching video, okay? This is going to be solely based off of due diligence, all right? So this is in hopes to prepare you for the upcoming week, so that you're aware of what opportunities you could take advantage of for day trades and swing trades, okay? And not only am I not going to be teaching during this, I want to make sure that you guys fully understand how this works, because I know my members know, but I don't do this daily for everybody. So just so you're aware, this is a full list of what I'm looking at. You pick 1 to 3 tickers, if that's your comfort zone, and kind of create a focus list to watch for the upcoming week. Okay, so if you trade penny stocks, some of these are not penny stocks, right? If you trade futures, some of these are not futures. It's kind of a mixed bag. Okay, either way, let's jump into it. I'm really excited. First things first, the S&P, right? And what we're charting right now are S&P futures. So this is in the TD Thinkorswim platform. We're charting S&P futures, and mainly the time frame that we're going to be referring to is the daily, right? 1 year, 1 day. We might also refer to the weekly, which is 3 year, 1 week. Okay. And even at times the hourly, which is the 20-day, 1 hour. This is just to get different perspectives and see where we're moving short to intermediate term. Okay. Now for the S&P, because this is always a ticker that people want to just go crazy over, I'm actually bullish going into the next week. And to be clear, I don't base any of my biases off of anything other than price, right? Occasionally we'll take into account some of the macro data and how that has influenced price, but more or less it's always price. That's what's king here. So for the S&P, the reason why I'm saying that we're probably going to get a strong week overall is because we came down this week. So this is the 5 days, 1, 2, 3, 4, 5, Monday through Friday. Over the past week, we came down to support on pretty high volume, right? That's kind of the thing that really stuck out this last week that makes me optimistic going to the next one. We came down on really high volume, right? Relative volume, that is. We tested historical support down here in the high to mid 2700s. Okay. We'll talk about those levels in a second. And we defended it, right? This is a very strong daily candle. If you look at any other time frame, right? The 4 hour, the hourly, whatever you prefer, we had borderline bullish engulfing candles, which pretty much just say that not only bulls took control back, they took it back aggressively and dominated bears. So the way I see it, this was the area that bears could have put up a big fight, and if we lost that, we would have slid down to at least 2500s, but it was defended again for the second time, technically the third time even. Either way, we defended that zone. So big picture, this is a note for long-term investors too. That's going to be a big area that needs to hold. Okay. Obviously this week, we're probably not going to test it again unless there's some kind of black swan headline. But bottom line, that's going to be a big area that needs to hold. And specifically that zone. So I'm thinking about this in terms of zones, not just one flat key level. 2771 to 2785.75. That's the demand zone here. Right, that's where buyers are sitting. Okay, now going into this week, what I'm really looking for is at least a test of 2930. So those of you that know my level or my type of analysis very well, A lot of what I do for key levels are based off of Fibonacci retracements. Okay, we got a lot of videos on that if you look at our YouTube channel. But basically, if we just look at the daily fibs for the S&P, and I got a ton of key levels here. It's a very crowded chart. I'm not going to delete too many of these levels to simplify things. I want to keep it advanced. So if you draw your daily fibs just from high to low, right, you can see that we have two fibs nearby. And that's at 29.30, which is where we got rejected the last two times. So one time, two times, okay? And then we have the fib support down here that we just talked about at 27.85, which we bounced off of once and then twice again recently, okay? So to me, this looks like a bigger box, right? Where we're just moving back and forth. And I think at the very least this week, we should be able to test the upper end and potentially even break it. And the reason why I'm saying this could be the time that we break it, it's not third time's a charm or whatever the hell you're reading on social media. Main reason is because we actually have volume behind this move. Okay, so the way it works, right, when we're testing key levels, we have a brick wall and we're gradually chipping away at it, right? There isn't infinite supply, there is not infinite demand. So in this case, we've chipped away at that wall a couple of times, and if there isn't heavy sell pressure up at 29.30, we'll easily go and test those high 2900s, okay, specifically the 200-day. So couple of key levels overhead, but just to give you an idea, the nearby support, we have a couple of support levels, just short term, is at 28.41, okay? The slightly distant but realistic target here is 29.30. All right, and then we have 29.65. We have one more small level there, but I'm mainly looking at 29.30, 29.65, and the 200-day. Okay, so this is target 1, target 2, target 3. 1, 2, 3 for this week. Okay. And again, if price starts giving a sell signal and we crash lower and we lose that support, we'll play the short side. But for the time being, we defended it, so we're looking at the long side. Okay. Last thing I wanted to say with regards to the S&P, and this is the ticker we're going to spend the most time on, obviously. Last thing I wanted to say was just the monthly. So actually, I was going to show you the weekly, but I think the monthly kind of sums things up a little bit better. All right, a lot of key levels. Just ignore them for now. Just look at the price behind it. What we've been talking about in the Trade with Text chat, right, the actual paid $50 a month chat, extensively, is that this was a bullish monthly candle. So regardless of the macro data, of the jobless claims, of whatever, with that inside candle, if we get an inside up, it's going to signal a bigger move, right? So realistically, if we continue to bounce, we should be able to test that high fairly soon and actually break through it. Okay, that's in the mid 2900s. So that's target 2 of this week's targets. So this is a pretty relevant chart. You have to factor in the prior month's high. Okay, but what it's looking like right now, since we're at the upper end of that range, again, price, that we have a good shot at breaking above this month's high in the near future. Okay. So I know the economy's kind of taking a big hit now and fighting to recover, and whatever you think about COVID-19, I don't really care. Price is saying that we're going to test that high. Okay, this high specifically. All right. Now, to move on from this, I want to talk about momentum plays, right? Plays that I think will give us some opportunity over the course of the next week. So first things first, there has been a lot of momentum in large caps. Okay, I'm going to put a brief momentum scan in this video. I'm just going to show you a couple of tickers that I'm looking at, but one of the things that stuck out to me over the last week was just how financials did, right? Just how the fins performed. Really, financials have been weak, right? Banks specifically have been very, very weak. Sector's taken a big hit. And as you can see, right, it kind of faded a little bit lower, and then end of week, bam, big, strong green candle. And if you follow options flow, regardless of whether you believe in that or not, I think it's good for short-term momentum plays. A lot of these banks saw some very aggressive buying pressure in monthly and kind of 2-3 months out expirations for calls. Okay, one of the ones that has been underperforming that saw some big call buying is Wells Fargo. Okay, so mainly what I like to do is I like to identify groups that I'm optimistic about going into the next week, and then I pick one. I pick one stock. So we're going to talk about Nvidia later. Semiconductors have been strong. Nvidia has earnings coming up, right? That's going to be the ticker that I'm watching for next week for semiconductors. If you prefer AMD, whatever, watch that. Okay. Now, for Wells Fargo, the reason why I like this one is just based off of risk to reward. Obviously, some of the charts are a lot better for banks because this one has been underperforming, but the risk to reward is pretty nice. Additionally, actually, so I guess 2 points here. It did hit some long-term support and it held. Okay, it hit a big long-term support level. Now, this is the daily chart, and just to give you an idea of how I'm getting my targets, I drew my fibs from high to low here. So from this swing high on, what day was this? The 29th, okay, April 29th, to this low from last week. All right, that's how I'm getting my short-term key levels. So in order to kind of form this game plan, first thing we needed to do was identify the long-term support. So let's roll it out. We'll just go out to, well, let's see if it's captured on the weekly. No, it's not. Got to go out to the monthly here. You can see back from the recovery after 08, 09, so about 2012 and 2010 as well, we kept bouncing in these 20s for Wells Fargo. WFC is the ticker. And recently we came down to that level. Specifically, it's 22.58. Tested it and had a sharp bounce. So one other thing I like to do when I'm creating these game plans, right? We look at the long-term levels, we look at the short-term levels, and we formulate a game plan in general. But I like to look at a level that would be a trigger for an entry point so that I definitively know when to get in. I'm not second-guessing myself, because as traders, our biggest job is to be decisive, right? And manage risk. So in this case for Wells Fargo, that's the level that I want it to hold to stay on the watch list. It's 22.58. Okay, for a short-term breakout, for an actual trigger of a bounce, we want to base above 23.98. Okay, now reason being, right, the way we got this 23.98 level, it's the first fib. That's where it got rejected on the attempted bounce here, and that overlaps perfectly with this high. Okay, that high from last week. So not only is it a key fib here, it's also going to be that resistance from the high. And on any given chart, you have to focus on where price and volume are concentrated. Even if we zoom out here, right? Zoom out a little bit. Look at where price and volume are concentrated for Wells Fargo. Look where we have a lot of range and a lot of volume here on earnings, right? So realistically, that's where it could go back up to, right? Low 30s. And then additionally, we have it down here. Okay, so we're looking at a larger time frame to get an idea of larger moves. Specifically, we're looking at where volume and price are concentrated, and that's at 23.98. Okay, so all in all, to keep it nice and simple for Wells Fargo, we'll take it into the hourly so you can see it short term. If we're able to base above 23.98, then we'll take it on the buy side, we'll take it long. And the first target area would technically be the mid-24s. That's not where I really intend to sell. I'd be looking to sell at 25.15. That would be my first target. Okay, and that would be the March low. Okay, so a historical level. So 23.98 trigger price, 22.58 is the price that keeps it on the watch list, and 25.15 is the target. If you want to play options, you would use the 25 calls. If you play common stock, just enter upon the break of 23.98. Okay, so Wells Fargo, some nice options flow. Good risk to reward for a bottom bouncer if it plays out. Okay, underperformed, but we're looking for a little change of pace there. Now, next ticker is something that a lot of you guys are probably already familiar with, and it's one of those things where if you trade it, you trade it. If you don't, you don't. Crude oil. Right? And there are a variety of ways of trading oil. We're looking at futures here, but you can trade the actual futures in whatever brokerage you use. July contract, obviously, you would go June, but things have been pretty crazy for crude, so some brokerages aren't allowing it. You could trade USO right? Which now moves like a penny stock because how crude has been ranging, okay? Or you can trade UCO and SCO, which are leveraged ETFs. And if you do trade leveraged ETFs, please, please, please research them beforehand. Some of them have fees. All of them decay at a faster rate. They're very tricky instruments, and a new trader should not just jump into them without understanding how they move, right? Because math plays a big role in how they move, okay? Now, I'm going to refer to crude because that's where I get all my key levels from. The reason why I wanted to mention it briefly here is not because oil had a great week. It did, but I don't really care, frankly. What I care about is price, and price reclaimed a huge level on Friday on very high volume, okay? And again, I don't care about the OPEC meeting. I don't care about inventories. I'll trade those events, but what I care about is price. So 29.13 here was a huge level historically. If we look at this chart, so we're on the hourly now. Let's switch it back up to the daily. If we look at this daily chart, that is the high before crude oil dropped off big time. Okay, and actually I think it's referring to this one here. It's just drawn a little bit oddly. But that is the high before crude oil dropped off big time. And it flushed all the way down to $6.50 for this futures contract, right? Crude is now up huge, right? 400% or 500% from that area into 30s. And at a glance, it looks like a no-brainer bounce. But in reality, it has taken some pretty difficult strategies applied to this chart in order to really capitalize on this move. So to be honest, I've made a lot of money on this bounce back. It was not easy. It was very frustrating, and we missed out on a lot of opportunity too. Okay, but either way, crude oil reclaimed that previous high at 29.13, which means it should be able to reclaim 30. And we are at 6:40 p.m. on a Sunday, so these futures just opened up 2%, but we didn't know that it was going to reclaim 30 before that. We were just assuming it was based off the chart. So for crude oil, the bottom line is if it can hold 29.13 this week, we should start the rally in a pretty fast one up to the 33s. Okay, specifically, I can't read this level because I drew it up too much. 33.68. Okay, so 29.13 to 33.68 is the bounce we're looking for. And don't sleep on 30. 30 is a short-term key level, just 30.00 even. But this would be the big target area. Okay, so a massive reclaim on the long-term chart for oil. We're looking for a bigger bounce from here. Okay, and one of the last tickers we're going to go over briefly here is Nvidia, which, as you guys know, unless you live under a rock, has had a very, very impressive close of the prior week. Friday, you know, I tried to enter calls at the end of the day, couldn't get filled. And normally I'm actually pretty good with these scalps because I'm used to, you know, quick entry and exit points, but very tough to get filled. And that's because Nvidia just ripped, absolutely tore through the high and kept running. And mind you, we had been trading Nvidia since Monday, right? We traded it long Monday, then long again on Thursday, tried to get long Friday, and we couldn't get filled, so I just traded Apple instead, right? But basically Nvidia here broke through a long-term resistance level at 317.98 to all-time highs. Okay, now not only are we watching for this stock to keep breaking out on a larger time frame, because whenever you have a bigger picture breakout like this, a lot of people think that people are going to sell into the highs. Most of the time what happens is people wait for a back test of the high. So Nvidia has earnings on Thursday, right? I believe Wednesday or Thursday after the bell, and it should be able to get a back test depending on what those numbers are. But if you do see a back test of 317.98 that holds, whether it's this week or a month or 2 or 3 months from now, that's a buying opportunity because that's when smart money starts stepping back in. Okay? All right, everybody thinks that you're supposed to sell the breakout here. A lot of times you're right, but in general, when we have a multiple time frame massive breakout like this, it's going to bring more buyers. Okay? So 317.98 was the breakout. Just wanted to show you guys that this is a stock that has very high momentum. We'll be watching it for scalps on both ends this week. And the nearby levels that we're looking at, we have that closing price from Friday, okay, Well, sorry, that high at 340. But the nearby levels are 337, which is below 0.11. And the next target would be 344.87. So just $4 overhead. And finally, I thought I had that checked. I think I just got to zoom out more. Yep, 355.93. Okay, so options traders, there's definitely still some opportunity here, especially if the markets move up, right? And the reason why I outlined that level below for Nvidia is because there's a good chance that we'll have to correct some of this massive move, right? No stock ever just goes straight up without seeing profit taking. So hopefully we can pull back a little bit, use that fib as support, and then use that as a leg up to 344.87, 355.93. Okay, those are going to be the two targets for this week. Now, again, caution, we got earnings coming up, and this is a pretty overextended chart. So it's not ideal risk to reward like Wells Fargo. Okay, now just a brief note here. We'll transition into earnings for 1 second. A couple of very risky tickers. So mainly what I've gone over so far are higher probability. So basically a higher chance that they go from point A to point B of what we're looking for with our game plan. And then smaller potential plays. That's kind of how I prioritize my watch list, right? Based off of the chance of it moving to my target and how far that target is away, right? Is it going to give us, 10 bags on an options trade, or is it going to give us just a few ticks on a futures trade, right? So that's usually how I prioritize things. Based off of what we've discussed, right? The S&P, that's high probability. Wells Fargo, we mentioned that one first because it's both, okay? Crude oil, high probability, and then Nvidia, high probability, right? We've talked about plays that have a better chance of moving to our targets. Now, just to give you a short and sweet watch list for penny stocks and higher momentum stocks, SAVA had a failed trial this past week, which takes a lot of value out of a biotech company, right, in general. But SAVA used to be one of my favorites. It is now a bottom bouncer that got rejected at a key fib here. I'm just going to briefly mention this. That key fib at 276 is the reclaim for another big bounce. So what I'm actually going to do here, just so you guys can see my full weekend prep, as I told you, I'm going to try to include as much as possible. I'm going to set the alert over 276. And if you don't have alerts set regularly, honestly, I don't think you can survive these markets, because that's the only way that you can stay fully aware on the tickers that you're looking at. Okay, so SAVA, so that I don't have to look at it so closely, I'm going to set the breakout alert over 276, see if we can catch a little bottom bounce scalp on it. Okay, just for a day trade. NVAX is one of those stocks that is just running. And believe me, I don't think it's a $44 stock. I'm not going to let bias play into this at all. It had an incredibly strong gap on news of, I think it was like 388 mil in funding for its COVID-19 vaccine, which is huge, right? That's big funding. And whether or not they're first to market, or it's Gilead or Moderna or whoever, doesn't really matter. Based off of price alone, it's flagging. Got a nice daily bull flag, with $43.99 being the trigger price. So it broke it on Friday, did not hold by the close. That's not a coincidence, right? That's where sellers are sitting. And in order to go for another leg up, it's going to need to break that. So it's $43.99 as the key break there. And I'm not going to set an alert because it's probably going to gap up over it. So I'm not going to set an alert for it, but just to show you a ticker that I'm watching for Monday. Okay, see if it can follow through on that flag breakout. Almost did Friday, but not quite. All right. And then the last ticker here, before we talk earnings real quick, SRNE. There is a lot of offering risk. The news that they put out on Friday was insane. I'm not drinking the Kool-Aid. Again, you probably can already get that from this video that I don't really believe the hype. I'm very skeptical. I just follow price. So for SRNE, they had crazy COVID-19 news that pretty much said that they can remove all of the antibodies for it, which again, that's insane. If that is true, I don't think it's true. I think this is kind of a little bit of a BS PR here, but Either way, there is some offering risk for it. Just wanted to mention that because it's a hot stock. They have a lot of debt, so they'll probably put out an offering. Regardless, update your fibs on this chart from low to high and look for some plays off of these key levels. Right? If we get a positive reaction to 6.09, you can take a quick day trade off of it. Okay? If we get a strong close on the daily, which we did not get on Friday, and we gave up a lot of those gains, then we could see a continued run up. But either way, for SRNE, this is just a ticker that had huge news. I feel like you'd be crazy to ignore it moving forward, just based off that range and volume. Okay? And usually when we get that kind of a daily candle, we sink back down, usually cut that move in half. Again, that doesn't stop you from taking key level to key level scalps on both sides. So update your fibs from 139 to 9. That's how you draw them. And you should be good to go. Okay, so just a quick momentum scan. SAVA for a bottom bounce, NVAX for a bull flag breakout, and SRNE, tons of volume and range. And in general, it's just a hype stock now after that news. So watch for key level to key level trades. Okay, and to wrap this up, because we are getting pretty long here with the first video of this series, I wanted to mention earnings. Right, I think we'd be a little bit oblivious if we didn't talk about this. So one thing I look for earnings for the upcoming week, this is just a basic chart provided by Earnings Whispers. It's a pretty good free resource if you haven't used it before. But one thing I look for is themes. So especially as a long-term investor, I like to be aware of stocks that I'm holding long-term when they have competitors or just tickers in that same sector reporting. So for example, I hold Walmart long-term, right? So obviously that's a ticker that I'm going to be aware of when it does report. I hold Target long-term, and I also hold Alibaba long-term. Basically, because Alibaba reports on Friday, and it's kind of one of the biggest China companies that are actually reporting, you have to be aware of how Baidu reports, of how IQ reports, all of these other big China names. So the couple of themes throughout this week, we have China stocks. Actually, let me put this in black. It doesn't look as good. We have China stocks. Okay. And then we have a couple of semiconductors and a couple of retail. Okay. For just a focus list, I'm mainly going to be looking at, I probably am not going to day trade Walmart unless it has some kind of big, significant gap. For day trades, I'm mainly going to be focused on Target, Nvidia, and Alibaba, depending on the reports from these, BJ's, Walmart, and Bilibili. I might pay those some attention. Okay. So again, focus list, just to kind of roll back through this for earnings. Target. Nope, that's the eraser. Target, Nvidia, Alibaba, mainly what I'm going to be looking at. Okay. All of them have solid earnings history. Target more recently has had really strong digital sales. So this will be a really big quarter to see whether or not those digital sales completely offset the losses from COVID-19 in store again. That's kind of what they were hinting at. Let's see if it does it again and is able to rally. And any big dip on that, I'm more than willing to buy long-term, because as a long-term holder of both Walmart and Target, Target's taken some of their market share if you haven't read the filings lately. So that might be a good dip buy stock if it gives an opportunity. So for retail, Target. For China, Alibaba. For semis, Nvidia. Okay, that's what I'll be looking at. Either way, one thing that you have to note, and this is the last thing that I'll say for the webinar, a lot of these China stocks have very high short interest because of the big LK fiasco, right? Remember the LK CFO, I don't remember which executive it was. I think it was the CFO, maybe even the CEO too, were fudging the numbers a little bit. They got called out for fraud by Muddy Waters a while ago. That ended up being true. Stock is still halted to this day, and it's probably going to open up even lower after all the lawsuits. That created a lot of negative outlook for some of these China stocks, and a lot more of them have been accused of fraud lately. So whether or not that's true, this isn't a cautionary note at all. This is fun for traders, because what that kind of results in is a higher short interest. And when we have more shorts on a stock, we have the potential to trap them, right? And believe me, I short stocks all the time, even just as much as I go long. But when we have a stock with a higher short interest, if it goes up, those shorts are forced to cover. So this week, more than any week so far, we have the shot at seeing IQ or Billy or some of these other names really surge if they have a strong quarter. Okay, that's a big if, but if they have a strong quarter, they could significantly move up. Okay, so these are the China stocks, just to outline a couple real quick. IQ, Baidu, Billy, this guy here, WB, HUYA, NetEase, just a ton of names. Alibaba, okay, we got a lot of them. So my advice here is to focus on one or two. You don't need to focus on all of them. For me, it's going to be IQ and Alibaba, since I already hold that, and see if we can get a play off those earnings. All right, it's a lot of information. It's going to kind of wrap it up here, but overall, remember what I said at the start. This is replacing the free weekly newsletter. I'm going to try to put these YouTube videos out every Sunday. Additionally, just make a focus list. I trade pennies, I trade futures, I trade options. But intraday, whatever's moving and whatever's going to make me money, that's what I gravitate towards. So create a focus list of 1 to 3 tickers of what we talked about. Doesn't have to be everything, right? This is just my full weekend prep so that you guys are prepped up for the next 5 days. And focus on those, okay? It doesn't have to be from my watch list. You can watch Google, you can watch another penny stock, a biotech, APT, CODX, BMRA, whatever tickers you want. Just create game plans for them and be prepared for the week, because 90% of what we do as traders is just showing up, okay? Showing up and managing the trade. All right, but hopefully you guys enjoyed the video. This is going to kick off the first of the series. Again, this is going to be free, but we do have a paid membership for Trade with Tex, where we do this all day, every day, right? Monday morning, soon as we are about to open up, 9:15, I get on the audio, I share my screen, I show you guys what I'm looking at, and that's $50 a month, and we have a free week trial for it if you're not sure, okay? So if you're interested in that, go to tradewithtex.com. If not, like and subscribe to the YouTube channel, and I'll be sure to post these on social media every single time I put one out. Okay? Have a good rest of your weekend, and I will talk to you guys probably Monday if you're in my chat. If not, next weekend. Okay? Have a good one, folks.